Welcome to Strix's full year results to December 2020. We are joined today by Mark Bartlett, CEO, and Raudres Wong, CFO, who announced their results yesterday. Today, Equity Development have published a research note which you can find on our website, detailing forecasts and our view on the results. But for now, I'll hand over to Mark so that the company can present their take. Mark.
Thank you very much, Hannah, and welcome everybody to this Strix presentation of the 2020 results. In the next 30 minutes or so, I'm going to take you on a flying tour of Strix and just show you how exciting kettles and water can really be. We have an awful lot to go through, and I do want to leave some time for questions at the end. So I am going to run through the presentation relatively quickly, and then obviously we'll take your questions at the end. So please brace yourself. I'm going to start just to give a little bit of history for some of those that may be new to our story. Strix is a little bit of a hidden gem. Our roots go right back to the 1950s, where Eric Taylor started a company called Castletown Thermostats, based here on the Isle of Man. The core technology was invented during the Second World War and was used in the flying suits where pilots were trying to get to higher altitudes. It got too cold and they had to put heaters inside their suits to make sure they didn't pass out. They're clearly not a great experience in an aeroplane. Unfortunately, the heaters were switched on using resistive technology, and as they came on, it started to interfere with the communications on the plane. Again, not an ideal solution. And Eric Taylor came up with an idea which was effectively a switch action blade that switches immediately at a very, very specific temperature, eliminating all of the electrical noise and therefore allowing those pilots to be able to fly higher. The rest, they say, is history. In the early 1980s, there was a little bit of a rift within the family, and John Taylor, his son, set up Strix and vowed to become the market leader. I mean, to be honest, he did a really great job, as we now hold around 55% value share globally, nearly 4 times larger than our nearest competitor. In fact, actually 70% of you on this call will use a Strix product every day and probably don't realize that. So thank you very much for that 70%. We estimate Strix controls are used more than 1.2 billion times per day by consumers in more than 100 countries and by over 10% of the world's population. Yeah, so some fairly, pretty impressive statistics for the business. In 2005, the business was sold to private equity with AAC Capital Partners, who held the business through until August 2017, when we successfully listed on AIM, buying them out 100%. Frankly, the listing was the best thing that could happen for Strix, and in 3 years, we have grown the share price from £1 to around the £2.70, £2.80 you see today, with significant opportunities for the future, as highlighted in our recent Capital Markets Day. And from an investment point of view, Strix can offer a great deal. We have, and I'm going to demonstrate to you that with Raudres through the course of this presentation, an extremely robust and resilient business, demonstrated by our performance in the pandemic. We have manufacturing sites in China, Italy, and the Isle of Man, all of which have remained operational throughout the pandemic, other than a very short 3-week shutdown in China through the Chinese New Year holiday. Very strong focus on costs and continuous improvement, and that's embedded inside our culture. And we have an extremely cash generative business, typically with a cash to EBITDA ratio greater than 70%. And also a very profitable business. We have an attractive dividend policy, which we'll talk about later. And with our growth plans, that will remain attractive as we continue to grow our earnings. And the board is committing to delivering that as we did through the pandemic. So let me move into the first sort of overview slide for 2020. First of all, 2020, I mean, what a year. It's certainly not the average year, but for Strix, this was a very challenging period, but actually a very positive year as well. It was actually quite a pivotal year for Strix, building a really strong foundation as we continue to transform our business with a number of key strategic initiatives that will support our growth objectives. In the first half of the year, we saw our core businesses hit with China moving into lockdown during that Chinese New Year period, disrupting the local sales first of all, and then the supply chains to the export. This was very quickly followed by more global lockdowns and a further dip in demand for the kettle business. However, thanks to the dedicated team we have here, we responded very, very swiftly. And in May, as anticipated, we demonstrated the resilience of our business and saw a significant rebound for the remainder of the year, with record sales in most of the subsequent months, particularly in the regulated sector. And that strength has continued into 2021, hopefully with all you drinking tea and extra tea and coffee at home while you're in lockdown. But it has been a very positive period. For the other two categories of our business, we have a filtration and an appliance category as well. Both of those demonstrated good strength during the pandemic, and both actually showed positive growth throughout that period. And the outcome for the year was a very positive position of having a slight improvement in profit. We actually posted a 3% increase in our year-on-year EBITDA, with a very small decline in revenue, around 1.6%, while still continue to invest in what we believe are very key initiatives for the business. And given the confidence and the liquidity of the business, we've also been able to confirm our commitment to stand behind the progressive dividend linked to underlying earnings, with an increase to 7.85 pence per share, which is in line with our policy. From an operational perspective, just a couple of highlights before we go into the detail. We've continued to implement automation of our assembly lines. We now have 2/3 of our lines fully automated and all delivering the projected efficiency and quality improvements. We now make a control on each of those lines every 1.8 seconds. Now, bear in mind, probably 5 or 6 years ago, that was somewhere between 8 and 10 seconds per control. So a significant improvement. We successfully implemented a new business system, SAP, into our business without any problems going into that. So we now have certainly improved real-time data and have managed to streamline our internal processes. We also managed some very good awards from our key OEMs, one for best cooperation and one for the most outstanding contributor. And I think that really demonstrates our position within the value chain and the support we provide to our customers. From a strategic initiative point of view, we've also achieved a tremendous amount in 2020. We acquired a business called LAICA from Italy. Really not an easy task with all the travel restrictions and lockdowns that are in place, but it's proving an excellent addition to the group. We're also excited about the progress of our new factory in China, which Raudres will cover shortly, but still on track and on budget to be fully operational in August of this year. Hopefully, at some point, we'll be able to go out and see it ourselves. We've strengthened our management team, our engineering team, and the marketing teams in line with our 5-year plan, so really to support our growth ambitions. And we have successfully developed a record number of new products for the business, with 14 new products launched in 2020, and a similar number of products coming through in 2021. So that really is the new benchmark for our new products. Moving into the medium-term targets, these were communicated back in November's Capital Markets Day, and we made a very clear statement that we were going to double the size of our business, primarily through organic growth within the next 5 years. We remain very confident to achieve that. We wouldn't have gone out to the market with those numbers if we weren't, and we believe that we have built the foundations to secure that growth. Just looking at the progress on some of those sort of key measures, first of all, we have grown our share in the core kettle market by an extra 1%. That's been done even during the pandemic environment, and our commitment was 3% over 5 years, so you're well on the way to achieve that. Based on the positive recovery last year and the acquisition of LAICA, we are very confident of being able to achieve a 30% revenue growth in 2021, really demonstrating our ability to grow our business and well on the way to our 5-year target. We've implemented a new sustainability strategy within the business, and that is communicated quite widely on our website with a dedicated project team inside the business, led by myself, but also a committee at board level led by one of our NEDs, Richard Sells, making sure you've got the appropriate focus on sustainability within the business and in the new products as well. And as I say, given the resilient performance and confidence, we've confirmed the dividend, and the board remains very much committed to that progressive dividend going forward. All of that during a pandemic where we have successfully managed the costs whilst continuing to prudently invest in what we believe are key strategic initiatives. Some of you may remember back to 2017 when we listed, and I was asked a lot of questions about the changes to the business, and I expressed frustration that we really had not been able to realise our full potential under the private equity. And I hope you can see, and certainly through this presentation you'll see further, that we are now well on the path to do just that. We will emerge from the pandemic a much stronger business as a result of the investments made. We will realize that potential with a business set to deliver growth, very much an enviable market position, an attractive dividend, and an excellent ESG proposition. So with that, I'm going to hand over Raudres just to give you a bit of detail on the financials for 2020.
Right, thank you, Mark. So if we move on to the financial highlights, so revenue has declined by 1.6%, reported at 95.3 million, which is a very solid set of results despite of the pandemic disruption. Absolute growth profit held flat versus last year at a modest 0.5% decline, but with the gross profit margin increased by 50 basis points to 41.4%, which was very well supported by our strong product mix in the second half of last year, as well as our continued operational efficiency. The addition of LAICA in the last 2 months also have helped as well. Adjusted with a little bit of towards forward looking here, with higher growth coming from water, we would expect the gross profit margin to swing a couple of percentage points plus or minus, depending on the weight of the product mix. But with our new expanded operations in China, we would like to see more in-sourcing opportunities to help us to buffer any potential margin dilution. So our key strategic focus is to grow absolute profit, where we have demonstrated resilience in our model to buffer any potential shocks. Adjusted EBITDA increased by 3.2%, and with the adjusted EBITDA margin reported at 40%, which was 1.8 points higher than last year. This again reflects a highly flexible variable cost base, along with our continued improvements in operations. Adjusted profit before tax reported a 2.4% increase at 30.9 million, which is well ahead of our last November CMD day projection. Net debt reported at 37.2 million, an increase of 10.9 million, which is largely used to fund the acquisition of LAICA. So for dividends, Mark mentioned already, it's 2% increase underlying, which is matching our underlying results and in line with our progressive dividend policy. So a final dividend of 5.25p is proposed and will be payable in May. So if we can move on to the profit and loss highlight. Revenue declined a modest 1.6%, but well supported by the addition of LAICA, with growth largely in water of 20%, and our appliances category doubled, which is, however, it is coming in from a lower base. Kettle controls declined over last year, due entirely to the weak first half, as impacted by the COVID with disruption in the supply chain and lockdown in China. As expected from our COVID scenario planning, we saw drastic recovery in H2, where full year decline was reduced to 7%, and our market share in value was very well maintained. Our operating costs last year, before exceptional costs, was reduced 2% versus last year. So the group has leveraged on the opportunity to reorganize our resource pool to align to our strategic initiatives. And this continued to show our strength to manage costs under a challenging pandemic environment while supporting our top line growth. Exceptional cost for the year was mainly acquisition related of 2.5 million. We have also booked share-based payment costs of 1.9 million, which was substantially reduced from the previous year of 6 million. Onto taxes. The two tax paying jurisdiction, which is China and now added Italy. Before we added LAICA, our tax model has changed to, in China, we have changed to a new model, which is the import processing license model, and we changed it in 2019, and since then it has stabilized at circa 4.5% of effective tax rate of PBT. With the addition of LAICA, we would look to increase the effective tax rate to 6.5%, as the Italian tax rate is about 28%. And our home headquarter, Ireland operation, remained at 0% tax rate. So if we can move to the next slide, which is the cash flow. So this is a waterfall slide that shows major movements of cash and debts. As we would like to show how the group allocates capital to the core priorities that underpins the group's strong cash generation ability. With the acquisition, we have renewed and expanded our revolving credit facility to 80 million, which is with 3 banks and at the same competitive rates as we had previously for 5 years. Our net working capital requirement remained relatively low and stable, which is $500,000 outflows before the addition of LAICA. And with LAICA, it added 1.2 million outflow to a total of 1.7 million. As I have communicated in the CMD day last November, there is substantial room for improvement in LAICA supply chain. So right now, we're working with all the functions to integrate LAICA, and we're hopeful to see gradual improvement in the coming months. This is obviously will be well supported by our newly appointed general manager and our finance director, who has just joined us last month. We'll continue to work with them to drive higher cash conversion. Exceptional cost here is largely is all cash based, and it is all related to the acquisition related cost, which is then largely offset by the proceeds of warrants exercised by SUSE, our broker. SUSE doesn't have any more warrants. CapEx here largely pertain to the factory construction of 9 million. The rest is all operating CapEx, roughly approximated 6% of sales. We have slowed down CapEx on automation in the first half of last year, where we match it to our lower sales forecast and also to preserve cash. But we had resumed our normal speed to automation second half of last year and continue on to this year, where 67% of all assembly lines were now fully automated, and we are expecting this to go up to 73% by year end. There are some legacy, there will always be some legacy product lines that we will never automate, that's without the return of benefits is not there. On a separate note, Mark did mention that we have successfully cut over to SAP SAP system in Q4 last year. And in the current year, our plan is to roll out a new CRM system, which is going to integrate with SAP and allow us all to arrive at a better collaborative platform. Acquisition of LAICA is funded by the 10.1 million cash and 7.3 million equity, as you can see from this last bar here. And the OCF, operating cash flow conversion to EBITDA, was 45%, and that we included the factory capex and acquisition costs. However, if we exclude these, it would be 73%, which is quite in line with the normal Strix model. A few highlights on the net debt. Net debt increased by 11 million from last year, which included all borrowings, but not any of the deferred considerations of LAICA or IFRS 16 ROU leases. The reason for such exclusion was that the contribution from LAICA was only 200K in the last 2 months, and it's just not justified to include the entire deferred consideration as a fair measure of the net debt multiples. So for reference, the maximum deferred considerations are 5.4 million respectively for the 2 outer years, which are payable in FY22 and FY23. The net debt EBITDA multiple track at 1x multiple, and we projected that to stay on at around 1x multiple at the end of this year, where we will take on the deferred considerations in the net debt, but however, we will expect that to be largely self-financed. The total liquidity pool tracked at 42 million at our last year end, and we have plenty of headroom to meet peak net working capital draw of 6 million at any time of the year. Onto this slide, I would like to mention that I mentioned earlier in the cash flow slide that we have 4 core capital allocations priorities. During the year, we have prudently allocated fundings in the 3 capital pots, and they are capex for expanded operation and automation, acquisition, and progressive dividends. Now, we did not pay down any loans last year, but we will continue to deleverage with any excess cash not used in the other three priorities. And we have a very flexible revolving credit line with the banks, so that would help us with very good cash flow planning. So onto the factory. We have embarked on our land and factory acquisition project in late 2019. And since then, it has progressed amazingly well on time and on budget, and despite of the pandemic disruption last year. The new location is within the same Guangdong province as our current site. It is 22 kilometers away from our existing factory, and it is still well within the same 1 to 3 hours radius of our customer's space. The new facility could more than double our current facility capacity, but it's going to operate at the same operating running cost, and we are looking for more insourcing opportunities. The factory construction was completed this past January, and our relocation is already underway, where we plan to take 6 months till August to complete as our initial plan. Our group procurement team has started to do prudent planning on material and stock buildings in order to make sure that there's no disruption to our sales. We are also investing in renewable energy for all the assembly lines. And under the new facility, we are also modernizing the dorms to improve the welfare of all our workers. So the very last payment of investment of the factory, circa 5 million, will take place this year, and that will bring it to a total of 20 million budget, which is well on track. So with this, I'd like to trouble Mark to show us a video, show you a clip to show you how amazing this new factory is.
Great, thank you, Raudres. So if you could just bear with me 1 second, I am actually going to just stop sharing a second because it's usually easier to link into the appropriate slide. And I'll reshare. Hopefully, Hannah will tell me if this doesn't work. Okay. Hannah, can you actually, I don't think you can see that there.
I can't see the video as yet.
Can you see it there now?
No, just your calendar.
that's definitely not something you want to.
There we go. Now we have the video.
A bit slower, so I'll now play that one. Hopefully you'll see that come through. So hopefully, you could see that. Apologies for the slight sort of delay in getting that up and running, but it does exist. It's a really nice new factory that's in place. That was taken about 3 weeks ago. We've now already moved to part of the mold shop in there. The press shop is going in there, and the test lab is almost complete as well. So really significant progress, and very, very confident that we'll be able to get that back up and running, or fully up and running, by August 2021. I am now just going to try and go back into that presentation. So again, Hannah, if you could just confirm when you actually can see that, because it seems to be a bit slow coming through that side. That should be giving you the screen back.
You're there now. Brilliant.
Perfect. Great. So if we can continue on into the sort of key categories of our business, starting with the kettle controls, which clearly has been our business for some time now. The kettle control market ended the year broadly flat in its volume terms, with positive growth in the regulated markets and less regulated markets, offsetting a little bit of weakness in the China market during last year. For Strix, we actually saw an increase in our value share with growth in our key regulated territories, particularly the UK, USA and Australia, as well as strong growth with the less regulated markets, driven by some of the latest of the new controls we put in place, which are positioned to be more competitive. This more than offset a slight weakness in China, and that's sort of quite as expected, to be honest. In China, Strix products tend to be more present in physical stores because they're with the higher end brands, and obviously people couldn't travel to those stores. I'm pleased to say in 2021, sorry, we have seen a rebound already. Yeah, and China has certainly shown a recovery as people are now able to get more access to those physical stores as well. OEMs are reporting very good visibility, and we hold a very strong order book on the back of that strong previous year, giving us a very high confidence for the first half of this year. Of course, yeah, there are headwinds in the market. You've got commodities fluctuations, you've got foreign exchange, Brexit. Yeah, you can go on forever at the moment with the macroeconomics. We are very confident we can offset the impact of these through a disciplined approach in managing efficiency measures and the commercial initiatives. So even with things like commodities, we do hold a significant amount on our books. So we're covered for a period of around 6 months. And if we were to see a continued increase in those commodities, we would obviously pass that through onto the OEMs in China, as we have done in previous years. In the Capital Markets Day, we set out our 5-year growth plan. In the Kettle side, we projected a 3% CAGR growth, and that really is in line with what the market has been doing for the last 2 decades. It's been very consistent over that period to be 2 to 3% CAGR, and we're looking for about a 3% gain in our value share, having secured 1% of that already this year. And that really is going to be achieved through continued evolution of our successful U9 series, which has actually now sold more than 333 million units since its launch back in 2017. We will also bring out new variants for different geographies and different applications to expand that addressable market. And we're working on a number of innovations and technologies to bring in the next generation of controls, which will reduce raw materials and drive further cost reductions to make sure we can secure that incremental share. Looking at the roadmap, you can sort of see from the splits here, top left-hand corner, a range of controls coming down, getting smaller and smaller, using less commodities. The smaller they get, actually, the harder they are to produce. But because of the technologies we have and the accuracy we can achieve, we are able to actually drive down that cost whilst maintaining or improving the specifications of the controls. It also actually makes the competitive environment quite difficult for people to follow that, because you do need that level of technology and automation to be able to produce those reliably. We're also looking at things like connectivity. We do have a kettle here already where you can actually say, Alexa, boil the kettle. Great during halftime of the football matches. So you will see more of those, but I think that's probably more appropriate to some of the appliances we're going to do later on. As I said, working a lot on the cost reductions, and in terms of sustainability, we're working to drive out as much of the commodities as possible through different technologies and just making those controls more accurate in the production process so we can reduce the commodities. So I think the kettle side, people are very familiar with. It's something that has been our bread and butter. We intend over the next 5 years for that to maintain, slightly grow the 3%, as I say, but continue the same sort of level of margin through that process. So then the other 2 categories, the water and appliance, really there is a great deal of growth in these areas. And if I move first to the water side, you can sort of see this is a massive opportunity, sort of 3 billion opportunity in the key markets. We launched 7 new products during 2020, and we managed to get a growth in 2020 of 20%. So even in the pandemic, we actually saw good growth in this particular category. We are looking at an exciting new roadmap. The addition of LAICA certainly has brought a lot of new products, and LAICA itself will give us quite a kickstart into that growth plan. Over the 5 years, we've got a growth rate of a CAGR of 27%, which at first sight does seem quite high. Bear in mind, last year was 20% growth. We've added LAICA, which in itself will give the water category between 10 and 12% growth. So already you're getting up to those levels. The market itself grows at around 15% CAGR, but obviously LAICA will give us an excellent kickstart in 2021. We also have a very, very strong portfolio of products and a good sales channel now in the UK, Italy, China, and the USA. Those latter two being very significant growth markets for point of use filtration. Moving to the roadmap, you can sort of see the 4 key elements that we've got inside there. First of all, the at-home range. So these are fridge jugs and water stations, to support various geographies. As an example, the chiller Lumi was one of the first appliances we brought out under the Aqua Optima brand, and that's experienced growth in excess of 1,000%, with return rates well below the industry standard for electrical appliances. Next, you'll see on the market is a product called Aurora, which will give you true boiled water, chilled water, and any temperature in between, and it will start delivering that boiled water from room temperature in just 5 seconds. So highly efficient, obviously very eco-friendly, and a very, very competitive price to some of the other products on the market. So watch the space for that. The on-the-go category is more about the bottles, the sports bottles, the camping environments as well. And again, the addition of LAICA has brought a whole range of products to our portfolio, and we will be looking to market those in all the different geographies going forward. And the filtration, obviously a key part of this particular section for us. We have a very extensive range of filters now with the acquisition of Halo Source and the acquisition of LAICA last year, giving everything from removing the metals, the chemicals, plastics, viruses, even bacteria from different waters, depending on which geographical region you're in. We also have some very strong patented technology. In particular from LAICA is what they call a pour-through filter, about the size of a 50p piece, just a little bit thicker. You can put that in the top of a bottle, and effectively you can just drink as normal. So you don't have to suck water through the filter. It will literally just pour through it, and you'll hardly notice it's in there, but it improves the taste and takes the chlorine out of the water itself. So again, another very useful product in the sort of portfolio that we've now gained from that acquisition. Commercially, some of you may have seen some of the RNSs about Halo Pure. So we do have an opportunity in China where we're actually providing sterilized water for the farming industry in China. Really opportune time. The China government is trying to eliminate the use of antibiotics in the farming industry for obvious reasons. And Halo Pure is the perfect technology for that, and actually quite unique. Not only does it kill all the viruses and bacteria in the water, but it leaves a residue in the pipes. So even when the water has been passed through, it's still working to kill the viruses and bacteria. Very good opportunity for us. We've now signed contracts and installed 2 systems with 2 of the largest livestock companies in China. We sort of expect this year to build another 10 systems within the China market. And in the next 5-year periods, we'll continue to see that grow to a value of around £10 million in revenue terms. But certainly a huge opportunity. The addressable market for that alone in China is £500 million. So we may be being quite conservative on some of the numbers in there. Moving to the appliances, the appliance sector actually doubled its sales in 2020, albeit from quite a low base. And for me, this is perhaps one of the most exciting categories. As you can see from the numbers, again, a huge opportunity, and we really are just scratching the surface in this segment. The acquisition of LAICA, sorry, bear with me, my TV is going to switch off. Sorry, the acquisition of LAICA further expands our addressable market and moves us into food preparation and the health and wellness markets, both of which have performed exceptionally well during the pandemic. We also now have several agreements in place for the hot water on demand and the baby care categories, providing a global footprint as we develop further products for this market. If you're looking at the growth in this category, we're looking to triple the size of the category over the next 5 years with a really exciting roadmap of new products using existing patented technology, as well as some of the new products that we've acquired from LAICA. The market itself already exhibits a double-digit growth, and we are seeing excellent traction for some of those core technologies, such as the water stations. Routes to market will be a combination of our own brands, and we're certainly investing heavily to make sure we can promote those brands more aggressively, particularly in the digital media, as well as working with our existing partners. With Kettles, we're actually partnered with over 450 brands and retailers around the world, so we'll use those relationships to drive these products as well. From the roadmap, you can sort of see quite a wide range of different products that are available, from the water stations that I mentioned to different forms of kettles that are providing energy saving. They really are very important in sort of the sustainability message that we're putting across as well. These products do deliver true boiling water, And as I say, there's no preheating required, so they're extremely energy efficient as well. Baby care, we'll continue to expand into the baby care. We've had great success with Tommy Tippy. They've just launched new products over into Europe. And we're also now looking to expand into the sterilisation systems in both the UK, America, and in Asia as well. So you'll see more products coming through on that baby care section. And then the bottom two sections are the improvements or the additions from LAICA, particularly looking at food preparations. Again, these have been very, very popular during the pandemic, particularly things like the vacuum the vacuum packs for food, where people are at home all the time, they want to cook their food and make it keep longer. So we've actually seen a huge boost in the sale of those, and LAICA are certainly outperforming the rest of the market in that particular category. So moving on to LAICA, obviously we've talked a lot about it in the presentation so far. For me, this is an exceptional addition to our business, bringing a well-recognized and very established brand, a quality range of products to both the water and appliance categories, a very strong and dedicated workforce. It brings us a state-of-the-art filter production in Italy, as well as an exciting new roadmap of products. During the pandemic, very much like Strix, LAICA was extremely resilient. It actually demonstrated double-digit growth last year through those disruptions. Integration of the business is very much on track, with each of the functions having separate work streams in place and very clear financial targets, so we can actually maintain focus on that progress. And we're already in the process of restructuring the commercial groups to make sure we can establish combined distribution and brand lineups. We've also even started our first joint project. So actually we will be launching an induction kettle, which will be LAICA branded, and it's a Strix developed disruptive technology to go into the market. Induction hobs in Italy are quite popular, and therefore we're going to launch first into that market using the LAICA brand. Moving on to ESG, on the Capital Markets Day, we spent a lot of time talking about this, and certainly there's a lot of discussions ongoing. Really, Strix is very well positioned in this area and is a really attractive ESG proposition. And we're really working very hard to bring this to life and increase the communications to the wider market. From the E section, the environmental element, there's been quite a lot of press on our products, and we really can provide significant benefits. We reduce energy, we reduce the use of single-use plastics, we're providing clean drinking water, we're making products safer with a longer lifespan. So we really do tick all the boxes. In addition to our products, we also have a very strong position within our operations. And as Roger said, we're working to implement renewable energy in all of our assembly lines. In fact, when the new factory opens in August, that should all be in place. We're looking to reuse the wastewater. We obviously use a lot of water testing kettles. That gets used in sort of being recirculated through our heating systems and so on within the factory, as well as some other initiatives to continue to reduce our overall carbon footprint. Later this year, we will actually put out some very specific benchmarks. We decided not to do that until we opened the new factory, because it really would be a little bit comparing apples and oranges between the two. And we wanted to make sure that with the new factory, we set clear objectives for the next 3 to 5 years so we can report on those going forward. Obviously, social and governance aspects are equally important to yourselves and to all our investors. And here we are also very well positioned, with our strategy and core business activities clearly aligned to relevant UN Sustainable Development Goals. Inside our business, we work very closely with all of the relevant ISO standards, whether that be environmental, whether it be quality, whether it's health and safety. And we've been awarded very high status in recent audits, getting benchmark status for the ISO 9000, both here in the Isle of Man and for the majority of the aspects in China as well. The approach to sustainability within Strix comes from the top, with myself as CEO driving those initiatives, but as I say, also supported by a dedicated committee on the board led by our NED. So finally, moving on to the outlook. For me, this is a really exciting and quite pivotal period for Strix. We have a very resilient business with strong financial performance and are set to deliver growth to a committed 5-year plan. As a business, we have now built the foundations and are structured for growth. A new factory providing double the capacity, the acquisition of LAICA giving us a 20% growth in 2021, a highly competent and dedicated workforce, and a really exciting roadmap of new products. Of course, there are going to be headwinds, as I discussed. We believe that we're very well set to be able to manage those as we have in previous environments. And certainly, we will look to implement commercial initiatives as required to offset any adverse impact. And we as a management team are very confident of both our 2021 commitments and executing on the medium term to deliver against those 5 years targets. So finally, I hope you agree, having seen the very, very rapid presentation there, that we have a very compelling investment proposition. We have delivered growth during the pandemic whilst continue to invest in strategic initiatives. We have a high quality, resilient and robust business that really benefits from geographical and product diversification and are poised for growth with some really compelling opportunities. We have a very solid balance sheet and low leverage, providing us really good financial flexibility to navigate headwinds and deploy capital consistent with the allocation of capital priorities that Roger's mentioned. And we remain totally committed to a very attractive progressive dividend policy that really does reflect the board's confidence in the outlook of the group going forward. So in summary, I believe we are really well positioned to maximize our opportunities as we emerge from the pandemic, and we certainly intend to realize our full potential, delivering on the 5 years plans that we have communicated. So with that, Hannah, I will pass back to you for any questions, and I will turn the sharing off.
Thank you for a very comprehensive presentation there. And we have a number of questions coming in. Why don't we start with China? Now, obviously, you have a big manufacturing base there, and we've got a couple of questions in, both around US-Chinese relations, the fact that they perhaps haven't got off to the best start with Biden, and what are the negative impacts there for Strix, and also around your manufacturing and what percentages in China, and given this time last year it was shut down briefly, do you have concerns? Are you diversifying?
Okay, maybe I can take the second question first around sort of the manufacturing. So for kettles, 93% of kettles are manufactured in China, and China is in fact the largest kettle market in the world. So actually our location in China clearly is a very good place to be. And actually a lot of the supply base is a lot cheaper in China as well. So even from a cost perspective, it's the right place to be. In terms of sort of our concerns about sort of disruption and so on, to be very honest, China have been very aggressive from when they first got into the pandemic in putting lockdowns in place and making sure things were corrected very, very quickly. Any even minor outbreaks in China are dealt with extremely swiftly and I guess someone may argue quite aggressively, but they're very, very effective. So I think the location in China has had no disruption at all since those 3-week break back over in March of last year. So we're very, very confident about the manufacturing site and the supply chain. Probably also worth noting, our other supply chain channels or other manufacturing sites are in Italy and the Isle of Man. The Isle of Man has been certainly probably one of the safest places on the planet, I think. We've had a couple of short lockdowns, but in between those times, it's normality. And even in the lockdowns, the manufacturing sites continue because we are very, very careful in the social distancing tools that we put in place, and the government allows us to continue to manufacture. So I think our locations are very well sited, and we're very confident of those. In terms of relations, we have a really good relationship with the Chinese government. We've just, as you can see, sort of bought land for our Chinese factory. We work very, very closely with the local community to make sure that we can work with them. We've never had any issues at all from that perspective. We also work very closely with the legal side in China, with Beijing. As many of you are aware, we take a lot of legal actions and we're very, very aggressive in protecting our IP. And we've always had very, very strong support. So, to be honest, I don't have any major concerns about the relationships between them. And certainly we've not seen any impact in the past from some of the disputes that have gone on between them. Okay,
thank you. An interesting one here about the EU's recent introduction of a 10-year repair requirement law. And will that have an impact for Strix?
It's kind of interesting. So it won't have an impact on Strix. If anything, actually, it will be very beneficial to Strix. So typically, the lifespan of our products, we test all our products to 12,000 cycles, which is equivalent to heavy use of about 6 to 7 years in use. So if a kettle is going to fail, it won't be the kettle control that fails. It'll be something else if it's fitted with a Strix control. That said, some of the other products that are on the market that are with maybe some slightly lower grade products, they won't last anywhere near that period of time. So in many respects, that will actually help Strix and improving the quality of those products can only be a good thing. The only other thing I would say is, in many cases, the kettle industry does not always get applied to some of these measures. And even things like energy saving, you see them all over the place on things like fridge freezers and so on, but they didn't get applied to kettles, which are actually very energy efficient, providing you put the right level of water in the appliance as well. So not all of these things will necessarily come into the kettle market. Frankly, if they did, it would be very positive for us.
Okay, thank you. One here that I'm sure you've answered a few times before, but what is the average age of your patents, and are any close to the end of their life?
That's a really difficult question, because we have a whole range of patents. Typically we have anywhere between 150 and 200 patents active at any one time. Some of those will have 2 or 3 years left, some will have 19 years left, and we're constantly looking to renew patents. So for instance, some of the original patents have already run out and have run out some time ago. And you've got new patents on the U9 series, for instance, which are only 3 years old, so they've got 17 years to run. So very hard to answer that without giving a lot more detail about each individual patent. The one thing I will say is your patents are really important in the first 3 or 4 years of life of a product to sort of stop the competitors getting sort of an edge with you. After that, we tend to work much more on safety angle than we do on patents. And even with a patent that's expired, I mean, let me give you an example of the immersed kettles. Some of you will maybe remember, I just about do, the old kettles that had the sort of coiled, what we used to call a butterfly element in the bottom of the kettle. That was an immersed kettle, they called it. Those patents ran out about 13 years ago. We actually took a company to court 2 years ago in Holland on the copyright law, because it was an exact copy of our existing controls. And as long as you can demonstrate that it's an exact copy, you can actually apply those laws. And we did manage to take that product off the market. We never actually went to court. We actually hoped we would, to sort of set a precedent, but they settled out of court. And I think we've got quite a reputation in the market now. So we tend to be able to settle these things quite early on in a negotiation with a company.
Okay, thank you, helpful. One for you, Raudres, please, around tax rates. Tax both in China, and any changes that you've had to make or will have to make in order to make the 4.5% as sustainable as you can, but also the increased tax rate that's proposed for the UK, and whether that will also have an impact on you when it kicks in.
Right, okay. China, within China, we have 2 levels of taxes paying. The first level is domestic taxes on sale to domestic customers, and that's a 25% tax rate, and that's a standard. And then the rest of the taxes is all export from an OEM angle, which was export out to Bartlett or the rest, was export to all the OEMs, which is located around as where they install those controls into all the kettles, where they export out eventually. So that actually attract a much lower tax rate, and that's where the import processing contract license comes in. And that is a model which the Chinese government prefer. We used to be even lower tax rate at around 2%. And so that wasn't as preferred by the Chinese government, obviously. So we now actually have move on to a tax scheme system, which is much more preferred by the local authorities. And UK, we don't have a taxable presence in UK. We have a sales rep office only. So, and our the 3 taxable jurisdiction really is Ireland, Ireland, China, and Italy. But Ireland has a 0 tax. That's why the effective tax rate is reduced to sort of at a lower rate at 4.5, and then ultimately now we're going into 6.5 because of Italy.
Thank you. Couple of questions now around factories. It looks fantastic from that video you showed us, and congratulations pushing that on through during a pandemic. But do you own your 3 factories, including land and buildings? And on to the ESG credibility of your new factory, Ian would like to know, do you have solar panels on the roof, or what extra efficiencies have been built into the new factory to make it more energy efficient?
Okay, well, I think first of all, the congratulations has to go to our team in China, because we've not been able to get out to China in the last 12 months, and they've managed to keep it on track. So that actually has been really good. We obviously own the new factory in China. We don't own any of the other factories. They're all leased effectively. The factories in the Isle of Man are or have been leased from the local government, and they've given us just tremendous support. So that's a long-term lease program that certainly won't change. So yes, China's the only one that is actually owned. The existing ones in China are all leased as well. So yeah, we will be combining those into the new factory following the change in August when we've got it fully up and running. I mean, in terms of the solar panels, very well spotted. There is no solar panels on the roof. There will be in August. So that is something we've actually signed up and agreed to. So the renewable energy that we have will be solar panels, and that will cover all of the assembly lines in that new factory. There are other things in there. I mean, they get quite detailed. So we've done things like, allowing recirculation of the test water in there. We've got a sort of a tank underneath for all the sprinklers and everything else, which is done to minimize the use of water as well. So there are plenty of other initiatives in place, but the renewable energy is probably the biggest in the China region.
Okay, thank you. Mark would like to know about the increase in packaging costs. Which are the main types of packaging that are facing this upward pressure?
In the packaging side, we've had a number of areas. I mean, some of the packaging we use is plastic. That's certainly seen an increase, and a lot is others is the sort of cardboard, corrugated cardboard, which again over times has seen a number of peaks as well. I mean, overall, in terms of our product costs, they're actually quite small. I mean, we have done a lot of work. One of the things we do in the company is run a think twice structure, which allows employees to come up with ideas. And certainly one of the ideas that we implemented about 18 months ago was to actually recycle all those plastic trays. So we used to ship them into the OEMs, and the OEMs used to put them into scrap. We now actually get all those returned and continue to reuse those. So again, we are doing quite a lot of things to try and minimize that cost. But we need to make sure we can protect those products, because they, when they're not connected into a kettle, they need quite solid protection. In terms of the offsetting those costs, we are always looking at different methods of packaging. We are already sort of reviewing the corrugated cardboard to see if there's any more cost-effective ways to do that.
Okay, thank you. One for you now, Raudres, please. The provision for impaired inventories has obviously taken a little bit of a jump, certainly from 2019, when I think it was about 302,000 to this year, when we're around 2.5 million. Could you give us the reason behind that?
Well, that is all because of the fair value of acquisition accounting of LAICA. So those inventory were LAICAs, they were not Strix. So as part of the formal GAAP principles on acquisition, we have to go in to value everything, intangibles and intangibles of the company we acquired. And then since LAICA is an owner-managed business for decades, so they never really adopted the best practice of disposing the older inventory. So they've got like inventory sitting there for decades. So it's best now at the acquisition time where we clean up their balance sheet. So that's where it resulted.
Okay, thank you. Improvements from automation. You've got 73% target for the year end. How do you see this feeding through to margins, and over what time frame?
Yeah, that's again a really good question, and we don't particularly provide the margin improvement specific to the automation. I mean, a couple of things I will say. I mean, in the kettle market itself, typically there's a sort of 3 to 5% price erosion year on year, and that's been there for decades. We offset that by things such as the automation and also some of the reduction of costs in the materials that we're using, and that's sort of worked very well over the last 2 decades. I mean, when you look at the production lines, as I said sort of earlier in the presentation, we used to be sort of talking about 8 to 10 seconds for producing the control. Today we're below 2 seconds, so there clearly is some quite significant benefits in there, and that is offsetting any of the sort of pressures that we get from the competition on costs.
Okay, thank you. You did your capital markets presentation at the end of last year, majored in a big way on your ESG strategy. And I noticed during this presentation now, you mentioned the Halo Pure opportunity in Chinese farms and how it was helping to reduce the need for antibiotics there. I mean, this is obviously a big issue that's facing everyone. So what are the opportunities in pushing this into the US in the next year or so?
I mean, that actually is interesting, and it's quite challenging, to be honest. I mean, first of all, China is, as I said, a huge addressable market. So for us, that's definitely our focus. You're absolutely right. There's many other opportunities. Probably not America. I mean, we would first look at some of the sort of less developed areas, probably where we can do that. I mean, the Halo Pure product has been approved in China for human drinking water, and it's been proven to take out all those viruses and bacteria from the water. If you were to go to somewhere like America, you would actually have to reapprove all of that product, and that is a very, very lengthy process. So yeah, that would not be our first choice of the next territory to go into. It's more likely to be somewhere like South America or maybe India or one of those types of territories, with sort of similar approval processes to those in China.
Okay, helpful. On price erosion, can you given you run more advanced factories than your peers may do, is this price pressure the result of their willingness to take a thinner margin, and at what stage do you expect this pressure to ease?
If you look at there's only two different types of competitors for us. You've got the one genuine supplier based in the UK, and you've got all the Chinese manufacturers, obviously based over in China. The Chinese manufacturers are working off very, very low margins, usually close to usually single digits. It would be unusual to be much above 10%. So yeah, they already work off very low margins, and they really just rely on getting volume to keep going. And obviously, as they get increased costs and so on, it puts a lot more pressure on them versus someone like ourselves with obviously a very healthy profit margin in there. That 3 to 5% has been there for a very, very long time. In part, we drive it as well because we're constantly coming up with new technologies that allow us to produce lower cost products, and we're very aggressive at taking market share. So when we talk about that 3 to 5% price erosion, some of that actually is more shifting to a lower cost product where we maintain our profit margins, but it is actually a much lower cost product in the first place. So some of that is actually driven by ourselves. You have to believe at some point you get to the limits. However, I will say there are some extremely unsafe products available. Typically they're not sold in the UK, obviously, but around the world you do see them. Some people are prepared to cut corners quite significantly to get that low cost product.
Yeah. Okay. Follow up, please, if we may, Raudres, on the inventory from LAICA. Just a quick one here. Why was this not accounted for in the acquisition accounting to create an increase in goodwill rather than the impairment charge?
No, that was it is actually not part of the acquisition accounting. That is it is a principle in GAAP where we have to fair value all the tangibles and intangibles. So the inventories, just some of them are so aged. For the accountants, from the auditor standpoint, it's just we can't be taking it on at face book value.
Okay, thank you. I have one final question for you, Mark. When I head down to my kitchen later, how will I know if my kettle has a Strix control?
Good question. It used to be very easy because when you took your kettle off the base when it was in operation, it would switch off automatically, whereas most of the others don't. If you were to put it back on again, it would continue to boil if you took it off in mid-cycle. It is actually written on the control. I'm just going to see if I've got one behind me. I have. Bear with me. I'm going to do a live demonstration. Typically, what you'll find on a Strix control, you can obviously tip the kettle up and you can see it written inside. Make sure there's no water in you when you do that and it's not boiling. But typically, you'll see a control with a sort of earth tab on the side and it's actually quite low. Our competitors' ones are much higher. So the other way you can tell it's a Strix kettle, when you put it on the base, it should drop straight onto the control and be very easy to locate. Many of the others actually are much harder to locate, but it is actually written, if you look very, very carefully on the side, you can't see it on the camera obviously, but on the side of the control, but you do have to look quite carefully for that.
Excellent. Well, I know where we'll all be going after this call finishes. So listen, that's our hour. Thank you both very much. And we look forward to hearing from you again in 6 months' time with what I'm sure will be more good news.
Thank you very much for your time, everybody. Much appreciated.
Thank you.